He's one of the more notorious billionaire investors in the world. You'll be able to invest alongside him on the New York Stock Exchange very, very soon. We'll go into all the details. Before we do, take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool, and it's the best way to support this work I'm doing on YouTube. Again, check out that website, fool.com/Frankel. And please take a minute and click subscribe to my channel if you don't already. So let's go into it. I want to share, this is the roadshow presentation that Bill Ackman and his team made. So what is Pershing Square USA? That's the name of this IPO. So first of all, it's important to discuss what this isn't. This is not an IPO of Pershing Square's existing hedge funds. That actually already exists. It trades on the OTC markets. So if you go to like the search field in CNBC or Yahoo Finance or any of those and type in Pershing Square, you'll find where that's listed on overseas markets right now. It's not directly listed on the US market, but you could still invest in it on the OTC market. This is a brand new closed-end fund. It doesn't own any assets yet. So a closed-end fund, it's similar to an ETF, but the big difference is that a closed-end fund has a finite number of shares, where if you sell 1 million shares, that's all the shares that are going to be. Whereas with an ETF, as people buy more shares of, say, the Vanguard S&P 500 ETF, it puts more money into the pot, more shares are created, and more money that has to be invested. A closed-end fund is just a finite amount of capital that gets invested by a company. So Pershing Square USA, ticker symbol is going to be PSUS on the New York Stock Exchange. It's going to go public with a $50 a share IPO price. That much we know. The investors can participate. They have to buy at least 100 shares to do so. So minimum initial investment is $5,000. Pershing Square itself, you can see right there, is investing $500 million alongside its investors and is committing to a minimum 10-year hold period on its investment. So designed to be a pretty long-term investment vehicle, Pershing Square is backing it with its own capital. It's unclear exactly how much they want to raise. Some say in the tens of millions of dollars or tens of billions of dollars. It's entirely possible this could be the largest closed-end fund ever raised. It's going to be structured so it's a pass-through fund, no corporate or other entity-level taxation. Similar tax structure to a real estate investment trust, if you're familiar, where it just kind of passes the gains through. Investment flexibility, Pershing Square. We'll get into the investment strategy in just a second. But this business has no assets to start. It's important to mention. Bill Ackman's well known for his stakes in Alphabet, in Chipotle, things like that. That's not this. So it's a blank check company in that sense. If he raises $10 billion for this closed-end fund, that's the capital he has to work with. He has a pile of $10 billion in cash. So it's similar to a SPAC or a blank check company in that way, in that it's just a pile of money that he could figure out how to invest. He's not going to buy full companies. The plan is to build a concentrated portfolio. Let me go to this slide over here. And I know the print's really small, so I'm going to read you the important parts. He plans to build a concentrated portfolio of 12 to 15 stocks of large cap companies. And he wants to make large investments in them to the point where he can kind of exert some control. Essentially, this fund's going to be an activist investor. Looking for a few characteristics, you can see them on the slide. One is a company with a big barrier to entry, simple and predictable free cash flow generation, limited exposure to extrinsic factors that we cannot control, like government headwinds or things like that, a strong balance sheet, attractive valuation, minimal dependence on capital markets, a large market cap, and exceptional management are kind of the things that Pershing or Bill Ackman and his team are going to be looking for. They want what they call asymmetric payoff opportunities. So pretty much a concentrated portfolio, and that really tracks with Ackman's current investment style. Pershing Square itself only holds 7 different stocks, even though it has well over $10 billion under management. So this is Ackman's investing style. He aims to just concentrate all of his money in his best ideas and aim to beat the market that way. And so far, it's been successful. I'll go up here and just show you kind of the cumulative returns. So the gray bar here is the S&P 500 since 2004 when Ackman started Pershing Square. So the bottom line is the actual return that investors received, which we'll get into the fees now. Ackman with Pershing Square, the hedge fund charges a 1.5% management fee. You can see that right here, plus a performance fee of 20% or 16%, depending. So even with that pretty high fee structure, you can see that the fund has handily outperformed the S&P 500 since 2004. Now, Pershing Square USA is only going to be charging a 2% annual management fee, which, to be clear, is very high for an ETF or a mutual fund, but is way below the standard hedge fund structure, which is essentially this is going to be a publicly traded hedge fund. To be perfectly clear, that's kind of how it's being used. Is charging a 2% management fee, no performance fee, and that 2% fee is waived for the first year. Had Pershing Square only been charging a 2% management fee, it would have gone up a whole lot more. It would have been a 36x investment in the past 20 years. There you can see $10,000 invested at the new fee structure would be worth about $360,000 today. So that's the bull case for this investment. You can see it's broken down a little bit clearer down here. So 10.1% annualized return for the S&P since 2004. Inclusive of the big hedge fund fees, Ackman still returned 16.5% annually for his investors. Without the fee, it would have been 19.4%. So really big outperformance there. No guarantee he's going to replicate it with this, but he's doing his best to put the same pieces in place. And here's the really interesting thing. In what he calls Pershing Square's permanent capital era, which is kind of like what the closed-end fund is. It's where you have a finite number of capital. You're not worried about investors withdrawing their capital, putting in new capital that you have to invest. Just one basket of capital, permanent capital. Since then, the S&P 500's had a really good run, 14.1% annualized returns. Pershing Square, even net of its fees, has doubled that and then some, and it would have been even more if it was just a 2% management fee. And that's annualized. That's not a total return, that 31%. So really strong track record of performance, which is why Ackman is trying to leverage it into an IPO of a new vehicle. It could definitely be successful, but it's important to know that the performance figures you see on your screen represent past performance and are not a guarantee that you're going to do just as well. Now, the timing of the IPO, we don't know exactly. They haven't announced a date when it's going to start trading. I use SoFi as a brokerage. They have it listed as July 30th, which would be in a little under 2 weeks. But that's totally unclear at this point. I know the IPO roadshow is still going on. And one other thing is that Ackman is committing to very, very good investor communication, which with some of my other investments is a problem. So quarterly analyst conference calls, an annual investor day and presentation. Ackman is very active on X, formerly Twitter. So he's going to use that as a way to update investors in a timely manner as well. So he is, he really wants to do this right and treat investors as partners and things like that. So I'm watching this one. I don't know if I'm going to invest in it yet, but Ackman's track record really speaks for itself, and it doesn't look like it would be a bad investment, especially since right now you're not buying any assets. It's just cash. So if you think Ackman is going to allocate your cash wisely, this could be worth taking a closer look at. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.